Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, April 12th, Friday. Well, today we have a lot to cover, and it's a really red day due to several critical factors that affect the market and also worldwide. Let's start with the economic data, in which Michigan's consumer sentiment preliminary for April came way lower than expected, from 79 to 77. And with that came the Michigan 5-year inflation expectations going up from 2.8 to 3%, so going away from the target of 2%. And overall, the inflation expectations are way higher than before. So lower consumer sentiment and higher inflation expectations, that's a really miss from the fundamental side. Apart from that, big earnings from JP Morgan Chase disappoint due to the guidance on the interest income. Obviously, there's a track and the outlook for a lower interest rate around 3 months from now to 2024. So the interest income is going to be lower when the Fed starts cutting rates, so this year. And Wells Fargo is also suffering the same. So lower interest rate income cuts into profits. And Citigroup, it's also more or less on the same. All three are pretty damn red today. JP Morgan is 5% in the red. And I mean, this is affecting even more the S&Ps. And on top of that, the third part of today's session is just this, that Israel is thinking, and US also, that Iran is going to join the war, is going to attack Israel in an imminent manner, 24 to 48 hours from now. So the markets are freaking out with the possibility of a broad war in Europe. That is affecting crude oil. It's super in the green today. Crude oil is spiking, dollar is spiking, commodities is spiking. And I mean, this is a combination of really bad factors that are affecting the market. And also, Feds are talking and saying, Fed Goldsby is saying that Middle East instability is a wild card for the Fed. And it's not good because a negative supply shock in crude oil and commodities will really affect the markets. Also, Fed Goldsby saying that if PCE is reinflation, the Fed will stabilize price. And if PCE shows better readings, that will make us feel better. So they are pointing towards the Middle East, they are pointing towards the PCE and the housing market. Everything needs to cool down. And right now, I mean, everything looks pretty bad. So let's see what happened today in the Nasdaq, because I mean, I've been saying this a lot. This market is just chopping everyone around. I think it's in a big macro, huge distribution area. And after on Wednesday's sell-off, yesterday's squeeze on Apple News and AI, and now we are coming back again. This is a liquidation of longs from yesterday. Yesterday we got big squeeze, cumulative delta and open interest increase on the Nasdaq, and now everything is gone. Everything is gone with no a single pullback in time. Everything is just going down. And I've been watching several levels. For example, on the 5-minute, the first level that I was watching was this order block, pretty high, way higher on the 50% retracement. And I think that was a pretty good level, but I mean, it just went through directly to this 15-minute fair value gap within discount at 50% retracement. So I was watching that, but on the bounce, we didn't get pretty much what I was expected. I was expecting this, and we just continue lower and lower and lower, and the market opened and we continue lower and lower, and we are way below the golden pocket, and we are taking liquidity of all this side. So this should be a consolidation right now, but the move is insane. The move is insane from top to bottom, not only from the open, from pre-market high to current levels. There's 2% of red for today, and everyone is waiting and watching the Middle East. Everyone is waiting and watching all these banks that are reporting earnings. Look at this. JP Morgan minus 5.76. Wells Fargo also in the red, consolidating. BlackRock minus 2%. Citigroup minus 2%. Everything is going down. Financials is minus 1.40. Consumer discretionary is feeling the pain the same as technology. S&P's is also, I mean, it's in pretty just sell-off mode due to small caps being destroyed. Treasuries are pushing higher. I think a lot of money is being put into treasuries and also on dollar. Look at dollar. Dollar is just spiking since early morning and early overnight. Dollar is just spiking. So what can we do here? What can we do? So the first thing is just not being confident. Everything can go lower, lower and lower and lower. This is a good zone to really see some kind of consolidation. And the first target that I would try to see, I mean, first is Friday. On Friday, with this kind of news and sentiment, I mean, there's just going to be sellers and sellers and sellers unloading everything. So if you think this is going to be some kind of a move, I think the first level that we need to reach should be this. And I think that's pretty much done because for now until there is just 0.67. It might be possible because there's a long way of shorts right here. But I mean, there's also this liquidity lower and more lower, and there's liquidity even lower. So, I mean, with these catalysts in this sentiment right now today, everything can happen. And I already took the decision because I was looking for setups and none of them were appealing. It's Friday with pretty damn bad news. Are you willing to risk it? My answer is no. I think smart traders are out of the markets, are already taking profits, are already unloaded their positions, and we will see next week. That's the best advice I can give you. Commodities, even gold, is just being destroyed. Being destroyed. Apple is the only one that was green due to the yesterday's continuation move into the AI FOMO, but everything is just solid red. Everything. Just everything. So if you are smart, if you think that Fridays are for capital preservation, I think today is just throw the towel, reevaluate during the weekend, let the weekend happen. We need time to assess what can happen in the Middle East. And when that happens, let's see how it goes next week. But we really need to buckle up to reassess the situation and not continuing trying to be on the markets, because right now the risk is pretty damn huge. And I think that's all. It's as simple as that. That's all from my side. As always, if you found this video useful, please give it a like, subscribe to the channel. I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day is looking pretty damn bad and it's not over yet. Anything can go lower. Anything can happen. So be really, really careful. Have a nice weekend. Remember that patience, discipline, risk management, those are the smart things to learn, to develop, and to really understand how it affects your trading in a good way. So be smart, have a nice weekend, and see you on Monday.